Hello, ladies and gentlemen. Welcome back to another daily market review. Today, we had another down close day. It was a continuation from yesterday. Today, it tagged the higher low of the daily S&T divergence. So we have an S&T divergence here. Today tagged the higher low of that portion, which was normal. After yesterday's down close candle of almost 600 points, which is massive. Like personally, I've never seen a 600 point candle on the daily before. That was new for me. And obviously, after a day like that, you should be anticipating a continuation or an inside day, the worst case scenario. However, because market engineered liquidity up here in this section of the price action, the likelihood of having a continuation today was more than not. So let's dive in and let's see what happens. First things first, though, I want to talk about something real quick. I want to divide yesterday's range in quadrants, basically. Do I have the setting? No, I gotta do it manually. Let's extend the lines. Sorry. Let's extend the line. So I'm gonna be looking at 25% of that candle of yesterday's range, 75%, 0, 1. All right. So here's what we get when we look at it. So overnight price action retraced all the way up to 25% of yesterday's daily candle and rejected, sold off, tagged the sell side. This is a very, very, very typical pattern of the market, and the more it stays below the 50% of the range, the better it indicates weakness in bearish market or bearish moves, and it indicates strength in bullish moves if it stays above the 50%. So let's dive in and see what happened today. So first things first, I'm gonna keep the sell sides on the chart. We have the S&T low, then we have the higher low of that S&T. The reason I was looking at the higher low as a target was because Nasdaq likes to do this, guys. It likes to just tease around nearby the sell side, tags the higher low of the portion of the S&T, and pulls back, then goes for the actual liquidity pull. So that's why I was keeping the upper one, because solely because of that, to be honest with you. Alright, so I'm gonna annotate this as the upper portion of the daily S&T, and this is the lower portion, which was not tagged. We could trade down there tomorrow. We'll see. I'm not sure, because it's the weekly close. Tomorrow could just be an up close daily candle, so we could just stay in today's range, and then on Monday or Tuesday next week it could get down there, but we'll see. It depends on the lower time frame price action, obviously. So I don't want to anticipate anything at the moment. The lower portion of the daily S&T, aka sell side. Let's make that red, actually, because that's the actual liquidity pool right now, or the actual drawn liquidity. So that being said, let's dive in. So the 4 hour. And 4 hour, before New York opened, we had two up close candles and then down close candle into a fair value gap here. This is the 4 hourly, and the fair value gap was respected with the bodies. And afterwards, actually, one more thing to mention here: the buy side was taken here. So 1, 2, 3, 3 times it was it traded into premium and then sold off. This is an indication, because if you look at the bodies, this is a turtle soup, guys. Okay, this is basically a liquidity sweep or a turtle soup, whatever you call it, but the bodies are telling you the story. Okay, so that's the first thing. When market does this, okay, the up close candles in a bearish move becomes order block. So in this case, these two up close candles, or this one, just because it's the higher up close candle, this becomes the OB on this time frame. Okay, now we gapped up here as I speak, which is normal. Then on the hourly, let's delete all that. Then on the hourly, we had the same thing. We have an up close, 3 consecutive up close candles here until 9 o'clock. And at 9 o'clock, it rated above it. Okay, this is a sweep or a turtle soup, and then it sold off. The first indication is how it closed. The hourly, it closed below the down close candle, which means this is a manipulation. Now manipulation took in place. Now you're safe to trade, basically. And the consecutive up close candles becomes what? It becomes the OB. Or you can take the last one if you wish. It's the same thing, really. So at 10 o'clock, silver bullet, it traded up into the OB. Basically, you can say immediate rebalance or retest of the OB, and then as expected, it sold off. The first target was the previous day low. It tagged at 10 o'clock after that retracement. Let me keep that in the chart because I want to keep all of them in the chart. PDL, that was the first target. So basically, we also had an SMT divergence here on the hourly chart. Equal highs being on NASDAQ, and I think it was a lower high on ES. But the thing is, as you guys, I mean, if you tuned in with the stream, I was not looking for the equal high target or equal highs getting rated just because of how 9 o'clock closed, because it confirmed the high. Okay, that's why I was not looking, because it was the manipulation. I hope that's loud and clear. Now, the up close candles here, basically the OB, plays a very important role. Why? Because that acts like the range, dealing range. You can get dealing range from higher time frames just like this, just by looking at the order blocks, and you trade that, or you look for entries in the upper portion if you're short, right here, because that is the premium. Now, let's do this. Manipulation above H1 BSL. This is basically individual candle manipulation. Okay, it's not like market is rating above buy side or below sell side kind of thing. It's just individual candles itself. And let's go dive into the 1 minute and see what happened. I need to clean the chart though, and I need to fix the lines here. 1 second, guys. Let me. All right, cool. And the PDL. So you see, this is the 1 minute model. Getting the dealing range from the higher time frame, but we're looking at the same thing, guys. Okay, a lot of people can't see this on the 1 minute, which is why I'm showing you on the higher time frame. Now, the reason I was looking at the 1 hour is because the sweep occurred above an up close candle on the 1 hour chart. Okay, if it was 15 minutes, there's no up close. There's no manipulation above an up close candle here. That's why I was not using 15 minutes. Okay, guys. Here on the 5 minute, same deal. There's no manipulation above an up close candle. That's why I was not using that, because it's on the hourly. It's happening on the hourly. Let me put it this way. It happened on the hourly. Now let's go down to the 1. This is the easiest way to get the dealing range. Okay. Now here is the manipulation. Price traded above buy side, ICT 2022 model. Displacement, fair value gap. This is the entry for 22 and 2 model. Sold off from there on. Range EQ got violated, and retest of the premium portion of that range. Here is the premium portion, and from there, the first sell tide got tagged, and PDL got tagged. I got stopped here. It's what it is. I don't care. I'm up on the day anyways. The reason I got stopped is because my stop loss was not the proper stop loss, and I knew it when I executed that trade, so I shorted there. So my stop loss should have been up above this high, which was 34 points that I was not willing to risk. So instead, I kept it somewhere here, I believe. 17 points on 5 micros, which was, just how do you guys say it, like the breadcrumbs or whatever, like nothing. So anyways, Um, sold off. Range EQ was broken. Pull back over there. This is the 10 o'clock manipulation basically. So here I'll annotate 10 o'clock open. This is the 10 o'clock low all the way up here. This is 10 o'clock candle manipulation, guys. Okay, it is basically forming the what do you call it, the basically the wick on the hourly. Okay, the whole rally is just a manipulation. Here, once it formed the divergence, the bearish divergence, that's when you can anticipate that the manipulation took in place and it is completed. Now you can look for short entries safely. So here, let me pull up ES to showcase that SMT divergence. Sometimes I annotate the wrong SMTs while I'm doing this review. It's basically because I'm trying to make it as fast as possible so that you guys don't have to spend time watching these videos the whole day. So here, this is the SMT divergence, which means manipulation on the hourly candle is completed. Displacement, fair value gaps here. Now, again, the safe stop loss would be above the SMT. Either the lower high or the higher high. It doesn't matter that much. Either or is fine. And PDL got tagged. Here, it's the same deal as the hourly. Manipulation above the 1 minute up close candle, rejected, sold off, retest of the OB, and went further. This is also an entry if you like to enter there. So basically, this is, let's annotate this hourly manipulation. Sell side is taken, PDL is taken. Let me just zoom out a little bit so you guys can see the market maker sell model here. This is the second leg. First leg, lower sell. Okay, so PDL is taken, it went for more. Here's the same deal, guys. Trade above up close candle. IFED basically closed weak, went for the sell side here. These are like 1 minute scalps. It's the same deal though, times fractal. If you see this on a 1 minute 30 second, it's the same deal as I'm reading it on the 1 hourly. Okay, so it's set the low here, formed a bullish divergence, which means market is in either pullback or a reversal. Now you have this dealing range from the SMT high, SMT low. You have premium fair value gap. This was basically, I mean, OSFL, one set out for life. Second stage delivery, went for the sell side. Let's make that red. OSFL or second leg target. This is the easiest trade, guys. Okay, like if you miss here, this is what you need to trade, and anything before that, disregard. Okay, no matter what, disregard that, because you're gonna hurt yourself. The market will go against you like this. Like, look at this. One fair value gap, inverted. Second fair value gap, inverted. There's an order block, inverted. It formed an OB, bullish OB, and it formed a bear bullish breaker block just because it wanted to go for premium. And if you can't see this, and if you execute shorts here, like basically late shorts, you will get stopped before your target hits. Okay, that's why dealing range is important. If you missed the premium portion, if you missed to enter in the premium portion up here, let it go and wait for the second leg, guys. Okay, because that's going to be the easiest trade. I promise you that is going to be the easiest trade, because if this doesn't want to go for the second leg basically, or one set out for life, it is going to show you up here. What it's going to do is it's basically going to form a bullish SMT right below or right above the range EQ. And that means you don't have to, that means you're not going to execute anything over there. Okay, so it's going to show you, it's going to tell you what's going on. Now here it had the same deal, and in this case it was on ES. Sweep above an up close candle, closed weak, went for the low. Now we have an OB retest here. Now you can short here on NQ, which was taken by Lost in My Mind. Very good trade. He spotted that divergence, so this is a lower time frame divergence also. Went for the second leg, 91 points booked by Lost in My Mind. Very, very good trade, man. So it went for the upper portion of the daily SMT from there. Basically consolidated here. Now we have a new range though. We have this high all the way down here. Okay. Now we have this dealing range here. Okay, guys. Now we're watching this as maybe a third push. Okay. And the third pushes are usually riskier because it doesn't have to happen. Market likes to form two legs. Third leg comes when it is a higher time frame distribution. Right? Well, in this case, because we are watching a daily time frame distribution, it formed today just like yesterday. But let's read this price action. Now we have, you know what, guys? I'm gonna clean the chart a little bit here, just to make it cleaner for y'all. Let's clean it all. Now we are dealing with this range here, okay? Let's clean this as well. All right, so here market formed a bullish SMT divergence, which indicates after a V shape, bullish SMT divergence here, which indicates the consolidation is over, and now the market is in either pullback, okay, or it's in a reversal. So it's going to target the buy side here. Okay, at the time we don't know that, but if you have a higher time frame confidence like daily lows, you can anticipate a pullback instead of a reversal. Okay. Now bullish SMT after V shape, rally, fair value gap here, rally, 3 drives. So it went for the sell side, minor sell side after the range EQ, but there's no smart money reversal here. So many people will take this as a market structure shift, but it is not a market structure shift. Why? Couple things. There is a wick here. Wicks always gets tagged. Okay, guys, that there's this wick. One, no manipulation above the 15-minute candle open. So those are the signs. Okay, so here it came down for the short-term sell side with a bearish SMT also right here, tagged the low, and here it did form a new SMT, which made market the rally one more time into deep premium. Now we're in like premium. So here it failed again, went for the low. So basically now once it does that, which means market isn't seek and destroy. Okay, so I'll annotate it all so you can see it. Formed sell side, formed buy side, run sell side, run buy side, and run sell side from there, and goes for buy side. Basically seek and destroy profile. We should be avoiding this chop. Okay, then buy side was taken here, and after that it basically displaced lower one more time, went for the sell side, and respected in SIBI. Now in this SIBI, this is the very important part. This is not executionable. Okay, like this, the first retest, second retest, third, fourth, none of them are executionable in my opinion. Okay, if you're taking this trade like something like this, okay, for me that is gambling. Okay, I gotta make that clear. I think, in my opinion, that is gambling. Why? Because this is a rejection with a V shape. Okay, there's no smart money reversal. What I always tell you, after a V shape rejection or reversal, okay, you have to wait for the SMT divergence. So in this case, this is a bearish rejection, which means you gotta wait for the bearish SMT divergence, which formed right here. Right here, it formed the bearish SMT. Now you can safely trade this. You can either take the fair value gap or you can take this OB. Either or is fine. After the SMT, you can do anything you want because the market is in sell model, which means it is going to be prime to go to the lows. We have all these lows. Let me clean the chart here. Clean. This is the first low, a high probability low, SMT low, high probability low. Now it didn't have to go for the third push, but it did, and tell you why it did in a second. Let's read this order flow first, though. So, bearish S&T order block, sweep above, up close candle. Everything is aligning here. Okay, everything is aligning here in terms of sell side delivery. What is aligning? We are forming a bearish S&T within a fair value gap, SCB. We have a V-shaped rejection, then we have the sweep, and we close below the OB. Okay, so the first fair value gap, IFED'd, went for the low. First sell side got tagged. Here, it chopped a little bit, basically waiting for the new 50-minute open. And in that case, I believe it formed some sort of divergence here. Yes. So here, it formed another divergence. This is 5-minute divergence, guys. It's not 1 minute. And this send price lower one more time. Retracement above. Now this retracement, why does it retrace? The reason it retraces there is because of a couple reasons. I'll tell you what. Now you have the short-term dealing range. First of all, if it's going to retrace, it's going to retrace into premium. Now, does it have to retrace? No, but here are the clues. Look at this candle. What is that candle? 5-minute and 15-minute open. Lax manipulation. One sign. Here, look at this candle. What is that candle? This is also almost 5-minute open. Lax manipulation. You see, like, the price will refer back to those levels to basically rebalance it fully. What do I mean by rebalance? Basically form or print one up close candle and one down close candle in that level. Okay, now once it does that, like here, now it is efficient. Okay, so here let's go back. I'm gonna delete some stuff. So if you're entering in maybe like here or something, like at the breakout, don't do that. Don't do that, especially if there are no lax manipulation. If you're short from here, that's fine. But if you're short from down here or maybe like here, you gotta break even your stop more aggressively because of this candle right here. Otherwise, you'll get clapped. So we have the short-term dealing range from high to low, comes up to the premium here. It basically formed V-shape and it came to the premium portion of the fair value gap, formed V-shape. Now you can execute in this short, in this fair value gap if you wish. And the rest was the third push was completed basically here. I believe it formed a divergence. No, it didn't form a divergence. It was just basically a fast-paced delivery last hour thing. And then here it reversed. And in this reversal, it is also tradable. I don't like to trade it personally, but if you wish to trade, you look at the same thing basically here. Sell side was taken, down close candle was swept. Now that down closed candle has to act like an OB because this is basically an ICT 2022 model. Comes down to the OB fair value gap, sends it higher. Where does it go? This is an S&T divergence on the 5-minute and it is going up there at least. Now it overshot, it went all the way to the high, completed the buy model itself, very energetic way, and that's normal in the last 10 to 30 minutes of the market. So pretty cool stuff. Here guys, I want to show one more thing, and again, this is the context of Monday's class, so if you get confused, if you have questions right now, don't be scared, don't be afraid. I'll be covering this all on Monday. This is the stuff that I've been working on for a very long time, and I decided to put it out there next week because I feel like it is ready. I've completed my back testing, I've completed my live testing forward sessions as well, so I believe it is ready, and I know for a fact that many of you will resonate with this stuff and love it because it gives early entries, okay, and it gives very good bias as well on the higher time frame. So here let me go down to go up to the to the hourly. Now, what do we have here, guys? The same deal as I was talking here. Okay, let's delete all that. Look at this candle up close, swept above, and candle closed below with weakness. Okay, once this candle closes, that confirms the manipulation. So what that means is the following hourly candles should not violate that sweep, because that's the manipulation, and market is not going to manipulate it one more time, because you'll never see market manipulating a manipulation. Okay, if it does so, you are probably wrong with your bias anyways. So I'm gonna say hourly buy side manipulation here. Okay, there's a typo, manipulation here, and then I'm gonna switch down to the 1 minute. Okay, all right, and also, let me go back to the hourly. So note this. This is the 1 minute, 1 p.m. candle. Okay. Now everything after 2 o'clock, look how energetic it is. Okay. That's what I want you to show, and how it forms an actual sell model on the lower time frame, and how it's waiting for a 2 o'clock open. That's very important. Okay. So we have the sell side here. We have the dealing range. Why is it this, by the way? Why is it this? Because that is the OB, guys, here, all the way to the low to the high, just like what I did here, from the OB low to the turtle soup high. Okay, same deal. If you get confused on the lower time frame dealing ranges, just go on one time frame above and you'll see it better over there. Okay, this is dealing range. And because on 1 minute you gotta zoom out to see the higher time frame dealing range, and it's not an easy in the first place. You'll get better at it. The more experience you'll have, the more you train your eyes, you'll get better at it. But at the moment, to make things easier, you can just get it from the higher time frame. Okay, so this is the hourly high. This is the manipulation, and in that manipulation, what does it do? V-shape and SMT here. First signals, and if you short this, you're shorting in deep premium, so your stop loss will be fine no matter what until it gets down here. As you can see, it never pulls back up there. Even if it was choppy, like here it was kind of choppy going back and forth, it will never reach up here. Okay, if the draw on liquidity that you anticipated is correct. So it set the high, set the low, SMT divergence and displacement after SMT divergence, and here is the 2 o'clock open. I'm going to annotate that. 2 o'clock open. Okay. Now, this is the 1 o'clock hourly price action, and this is 2 o'clock open. And this is basically, let me annotate the 3 o'clock as well. So, 1 p.m. candle, 2 p.m. candle. Okay. And it already set the market on the lower time frame for the market maker sound model. But at 2 o'clock, what does it do, guys? This is very important. Look. This is the open level. Okay, open level of the hourly candle. What is it going to do? It's going to manipulate. Okay, if it goes right away without doing this manipulation up above it's open, you're going to get stopped if you enter it before that. You're going to get stopped because it will have a wick, guys. No matter what, if it leaves it without wick, it's gonna get back. It's gonna be referred back anyway. So you don't want to be short anyways. Okay. Sorry. So here, where does it retrace though? Dealing range. You also have from the SMT. Where does it retrace? It retraces into premium portion of that dealing range. Okay, that's the first way to get it. The second way to get it is, let me delete that. Let me delete this. Let me delete the SMT. If you're struggling with SMTs and if you're struggling with the dealing range, look at the hourly, the hourly leg. So this is the hourly low, 1 p.m. low, 1 p.m. high. Look at that. Okay. This is its range EQ. Now, if I look at its 25%, what is it gonna give? 20, not 25, my bad. I should have reversed it. Okay, hold on, let's reverse it. 0.25. Let's get rid of the background. Where does it go? Do you see this? It is going into that 25% and diverges there. I think this was the divergence. Let me just double check that. I'm not sure if that was the divergence or not. Yep, that is the divergence. So once it completes the manipulation, it is giving you the signal to go short anyways. It's bearish diverges on the 5 minute. I think this is the 5 minute. Yep. So I hope this is clear, guys. You can look at PD arrays in this in these levels. Like, first of all, you have the upper portion of this fair value gap you can use. Then you have this CB that you can use. Then you have this BPR level that you can use. Anything is fine. You don't have to stick to one of them, or you don't have to use one thing specifically. There's no greater than, like, one is not greater than the other. It's all the same thing as long as you know the context. There's a volume imbalance here. You can also use that as long as it's inside the 25% to 50% of that range. You're good to go. Okay. And if this is not clear, just look at the dealing range, traditional style. Okay, nothing, either or is not wrong. Then it delivers sell side. Okay, but my point is, I want you guys to see how it is waiting for specific events to occur before making the move. Like here, look at this. It didn't complete the sell side until when? 3 p.m. open. You see that? And the reason it's waiting for those things is basically because we're watching a high time frame distribution. This was an hourly distribution, fellas. Today, what we've watched was an hourly distribution. So that was the time frame. So that's why it's waiting for the hourly candles open, the hourly candles close, and it was speculating in between those levels. So this is the first down close candle, swept above an up close candle, which is this portion. Second down close, third down close, completed and reversed here. And this low swept, formed an OB on every time frame. And I'll show you what I mean by that. So you see the OB on the one, swept the low. This is the OB now, or you can use the open price if you want. Nothing wrong with that. So this is the 1 minute sweep and formation of the OB. Now let me go on the 5. Here. Oh, I didn't sweep here? Oh, here, sorry. Wait a second. Didn't sweep here? Okay, let me go on the 15. Didn't sweep here. Interesting. I thought it did. Let me go on the 15. There's no sweep here. Am I tripping? It did it on the hourly though. That's why I'm saying, like, hourly is the time frame. Was the time frame for today. Swept the low. Use this as an OB to go higher, and the 50% of it, I think it's the whole thing though. And for the high now, right now, it's probably gonna retest this level, either the wick or the body, and maybe for more buy side or provide more buy side deliveries. Here, I'm gonna show one more thing, or should I leave it for the class? Let's leave it for the class. And you know what? Never mind. These sweep candles, first of all, the manipulation candle or rate candle as I call it, the rate candles shouldn't get violated, okay? That's the first thing. If it gets violated, you're wrong. Period. You don't have to go against the market or order flow. If it does so, just collapse the trade and reverse your position or call it a day. That's the first thing. Second thing, OB, and it is standard deviations will give you the daily range, guys. Okay, there you go. -2 got tagged, reversed. These are specific, precise levels. I can show you many examples of this, which I will in Monday's class, but for the sake of this conversation, like for example here, same deal. 1, 2, 3 up close candles, swept, weak close. Now it formed an OB. Here, the 3 up close candles is the OB, right? Where does it go? It goes for the main threshold, which is permissible. And look how it's reacting 2. Also put 1.5 as well, because OB gives, or OB projections really love a 1.5 minus 1.5 projections. You see, minus 1.5. Hold on, I need to do it properly. X down lines, 1.5. Like every time it goes one of those levels, it reacts. So here is the same deal. Up close candle, got turtle soup basically. Weak close, like the confirmation is basically once the rate candle close, or once the rate candle's low gets violated, so the next candle violates it and closes it below. Now you have the confirmation. Okay. And if I measure this whole thing, you see those are specific levels. So this was Monday. Okay, Monday morning, lunch, PM, and this is the close. You see, it gives the low of the day, high of the day, or whatever the case is. And you can do this on every time frame. I don't know why I'm talking about this right now. This was supposed to be talked on Monday, but I guess I'm excited or something. So here's the same deal. Standard deviation, -2. Now, the thing is, you don't know if it's going to stop at -2, -1.5, or whatever. But there comes the lower time frame order flow. If it switches, you know when it's going to reverse. Here, Tuesday 9 a.m., Tuesday 1 p.m. And it closes somewhere within that range once it tags it. Here, the same deal. Swept the low, formed the LB, standard deviation -2, -1.5. So the same day it tags those levels. But anyways, guys, this is another topic for the class. Like I said, I know y'all gonna love it. So, anyways, hope you guys find this insightful. I'll talk to you guys tomorrow. I'm not sure I'll be able to live stream tomorrow in the morning, but if the session allows me, I'll be back by the PM session, and hopefully I will be live streaming in the PM session. Have a great day.